Hi everyone, welcome again. This is Christopher from iGoldAdvisor.com, and we're focusing today, it's going to be a quicker video. We're focusing today on how to time your purchases in the gold market a little bit more efficiently. Now, this is really important for anyone who is in a long-term accumulation plan or a long-term investor in gold. You're going to want to pay attention to this video because there's a way that you can save a lot of money when you're buying gold over the long run. And that's to pay attention to some of the technical indicators. Now, we're going to get right into it today. And I've been presenting these videos over the last couple weeks, and I've been talking about support and resistance lines. And I want to show a little bit here how that actually works as far as a real world example. Now, if you are someone who is, let's say, buying gold every month at the end of the month, within the last week or so, the last 7 days of the month, you say, I'm buying $5,000 or $1,000 worth of gold, or even if that's silver for that matter, this is going to apply to you because if you were looking at this market on the 27th into the 28th of September, which was last weekend, let's say last Sunday night, and you said, well, I'm going to make my purchase of gold on Sunday night. The spot price, which is the actual live price for the underlying commodity, the underlying bullion, which trades on a world exchange. If you were saying, I'm going to buy that on Sunday, you would have been looking at a price of around 1145, as shown right up here in this blue line, 1145 for the spot price, which means that if you were, let's say, buying a 1 ounce gold eagle or an African Krugerrand or any of the other excellent gold coins, you would have been paying this spot price, 1145, plus whatever the premium is. And the premium these days on a, let's say, a single 1 ounce gold eagle comes to around $60. So you would have been paying 1145, let's say, plus $60, bringing it right to around 1205 for your 1 ounce of gold. Now, you can see here that 3 days later, 2.5 days later, we have gold that's come down to the current price. This is as of about 20 minutes ago, around 1116. So the price has come down around $30 in one day, in 2 trading days, excuse me. Now, yes, over the long run, if you're a long-term investor, you might not care so much about a $30 difference. If it turns out that gold goes to, let's say, $2,000 an ounce or $3,000 an ounce, this may not make that much of a difference. But then again, if you were about to spend 1205 for the coin plus the premium here, but you had the opportunity 2 days later to spend 1115 plus the premium, why would you not go for the cheaper price? Why would you not save yourself $30 per ounce and accumulate at a better price? And who knows, maybe you're buying 5 ounces. Maybe you are a high net worth individual who is buying 20 ounces of gold every month times $30 savings. That adds up to a little bit of spending money. And I'm here to say that I don't have an exact crystal ball, but I have some methods that can help you to time the gold market a little bit more precisely so as to save yourself some money over the long run. Now, what am I talking about exactly? Okay, we've been looking at these charts. Here's gold for the last year. We've been talking about this trend line that was hit 1, 2, 3, 4, 5 times. And a few days ago, I was saying when gold was around 1155, I was saying we are hitting this trend line again. And there's a strong chance that gold is going to come back down over the next week into this short-term support zone. Now here we have the key once again for people who maybe have not seen these videos or have not paid attention for the color coordination here, that's fine. I know there's a lot going on in this chart, and if you're not that into charts, I would ask you to stay with me because this has real world applications as far as saving you money. So on this chart, we have our blue lines here, which we're calling primary trend lines. And our teal color right here, which is shown below, is our short-term trend line color. So a few days ago, I was saying at 11:55, look, we are hitting, according to my analysis, we're hitting this trend line that's been coming down for the better part of the last year. And if you're thinking about buying here at 11:55, I would encourage you to wait for another several days or a week or so. And sure enough, here we are, guys, closing today at 11:15. So this could have saved some people some money if you were making a purchase. That's all I'm saying. Now, to get back into the longer term, as far as how does this play in with what's happening in the gold market right now, this is a pattern. Now, this is a legitimate consolidation pattern known as a triangle, taking the shape of a triangle. And typically these patterns are continuation patterns. So given that we have gold in a long-term downtrend, and you have another head and shoulders pattern here giving us a target of $990 an ounce, I'm willing to wager, as far as my own trading or my own investing, I'm willing to wager that over the next several weeks we are going to have a breakdown below this trend line and at least a retest of this 1075. So you may want to wait for that. You may want to say, let's see what happens here over the next 3 weeks, 4 weeks, and do we get a chance to buy again below 1100? At this point, I'm saying yes, but even if you're saying I don't want to wait that long, let's say you buy on a monthly basis, this would have been a lot better for you here buying today at 11:15 than just 3 days ago at 11:55. So I'm not going to stay on that point anymore. I just want to zoom in here and switch gears and show here's what's happening with the gold mining sector. Now you have the gold mining sector down here at the lows, which is another indicator that gold may be coming back down toward the lows as well. Here's zooming in over the last 6 months on the gold market, and we've circled the price action for today. Here's where we made our last video, up here. Now, if you were a short-term trader, this would have been applicable to you. And if you were, like I said, an accumulator of gold, why not be buying at these lows? Why not be buying at this low, and this low, as opposed to these highs? I don't see any reason why not to save yourself money. And that's not to say that you have to be a trader. It's just really to say it's worth taking this analysis into account. And that's what I'm trying to bring you here today, guys. Not to lose track, though. We bring this chart up every time, and I'm going to bring it up again today. And I'm sorry if this is getting repetitive for some of you, but I have a lot of new people joining this channel right now who are looking at this for the first time. And so I'm saying what we have here, even as we're trying to time our purchases over these next several weeks and months, we have a market that consolidated for 30 years and then broke out and is now retesting that breakout point. And that is a very, very bullish long-term pattern that we are expecting over the course of the next several years to retest this high around 1900 and eventually break above that high. Now that could coincide with some new lows coming into the stock market. There's been a lot of wavering in the stock market. That could correspond to who knows what sort of fundamental factors. Maybe a dropping in the bond market, maybe a loss of value in the US dollar or some other currencies. This is not just a US dollar phenomenon. But either way, we are looking at this as a bullish long-term trend that is currently still in a short-term decline, that we are looking to bottom here over the next several months somewhere in this 900 to 1050 region. And that's why it's important. That's why it's important to follow those technicals, because if you're buying every month, you could have bought here at 11.16 versus up here at 11.45, 11.47. So I hope this has been of some use. Again, this is Christopher Aaron coming to you from iGold Advisor. We were focusing today on just buying at a slightly better price point, and that's really what I'm here to try to help with, guys, is just getting the most for our money. Let's take as much gold for our dollar as we can now. And if we can all do that, hey, there's more wealth in the hands of people who know about these fundamentals and who are making these long-term investments for their future, for their financial soundness. Thanks for joining me again. We'll try to have another update this weekend.